Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of, drumroll please, August 13th. August 13th coming up. It is Friday night. I'm here at the office doing the watch list. You know, great week overall, and the end of the week we ended up with this turkey news, but I'm not even going to go into that yet. There's so much I want to go into this video because the HPS picks over the last few weeks have been just outstanding. And so I want to go into detail on the discipline required to just take certain setups. And if I put the setups on the watch list, if I put them on the HPS list, you have to abide by the triggers. I mean, those are the technical levels. And then we're going to go through each one of these and show you why they work out and why this continues to work out in our favor. So, I mean, yeah, we get involved in some penny stocks here and there. We get involved in some other stuff here and there. But when we talk about our divergent setups, when we talk about our HPS real quality multiple indicator setups, there's nothing better out there. Now, AVI, I've just got done with my research. I've been scanning through probably about 500 stocks. I'm not going to go up to 1,000, but about 500 stocks. I'm getting I've been in tune with the markets over the last few weeks. Or at least since I got back from my vacation, and you could just feel the strength in the market. So I want to bring up the first thing I want to bring up here, and not let you look at this AVY chart. It just happens to be starting off something. There's so much again I want to go into. This is the S&P. We had the turkey news today. It caused the market. We were actually short. I was short. It's all different things. We're long the coop. We're short the market. The market came down. We covered. Then I went long the market going into next week. So at this point, that was fantastic. We nailed that. Now, does this turkey news, the currencies and the tariffs on the steel and the Trump tweets and everything that goes along with the European markets, it's going to, what we call, be contagious to Europe? Is there going to be a contagion? Is there going to be, right now they're all concerned about the European exposure and the bank's exposure to Turkey and the lira and some of the forex currencies and everything that goes on. And the truth, I don't trade the forex. I trade the overall markets. And I can tell you right now, even though the markets got affected by it, we happen to be on the right side of the trade on this. I still believe we're going higher. This has happened before, recently, with Italy, and it was a one-day event. So I think, and again, this has to do with some of this. I think there's a pastor, religious guy over there being held hostage, and Trump here out there, laying down the law, and all of a sudden, at the end of the day, we get a rally because all of a sudden it appears that there's a deal to be made. So, you know what? Money talks. I don't care what you say. You want to get someone out of a hostage situation? Make it hurt on the money-wise, or give them money, and it'll solve everything. So there is the potential of that news coming out over the weekend. It's going to move this market. But overall, it's hard to be bearish in this environment. I know a few people are looking for black swan events. I know that happens. That could easily be. But also look at, technology increasing. I've been trading since the 90s, so I've dealt with a lot of issues, and those issues have been, kind of cleared up, and kind of there's some safety features now are being placed in the market so things don't repeat themselves, and the market overall is now being controlled by the Fed, so there's a hands-on group of people ready to act. It wasn't like that back in the wild west, the 80s and 90s. I mean, this has all been adapted over that time when we have to deal with these levels. And when we talk about time frame, we could continue to move higher over the next few years. It's not a big thing. What we're going to do is manage our shorter time frames, the daily especially. And again, even though we have a rollover, and it told us we probably had a good shot, and we also knew that we had a probably good shot of breaking out of this channel and moving up to the highs channel here, divergence here, really moves. I think it all comes down to what comes out over the weekend, and I actually think we move higher before we actually break any significant trends to the low side. All right, and a lot of people think that, and that's the one concern I would have. I hate to be part of the general, consensus in this market. I hate doing that. The market knows how to make everyone wrong. All right, so let's talk about the HPS. Now, the HPS this week worked out great, and I'm in the process of building out next week's HPS. Almost all our signals have been triggered. So this is what we look like. The first part of this video probably going to go out to non-members also, and then the second part will have the real HPS new picks out, the new picks on the screen there. Let me just fix this a little. All right, so this is when you go to the HPS site as a member of Day Trading Radio. You just go up. There's a link on the top of your dashboard, and then you'll get all these subs. And every week, this is part of the video watch list. This is the first half. I'll set up some stocks. Those stocks should be in a watching position, or they might be triggered depending on when I'm sending the alerts out. But they usually all start in watching, and then the trigger gets hit. The buy trigger or the sell trigger, depending if we're long or short, and there is shorts that show up on this. But why short the market when the market's been so strong? And then that would trigger. Everything's connected to your account, so you get the emails instantaneous when a trigger has been hit, and when you're supposed to buy, and when you're supposed to sell, and when when you protect yourself and take the trade off if it's not working. It's all arranged for you. So we're going to go through these, and just remember, there's a lot of education in these charts, even though you might have not taken them, or the fact is they're going to continue to set up like this, and we're going to continue to bring them to you. So it's important to review them so you could build that confidence, in the system and the method. And that confidence is required to take positions. It really is. I mean, there's a lot of things that are happening. Some things I don't even get into, But if I see something really, really good, we'll mention it, and we'll know to be in it. All right. So, Altria. That was a HPS setup. It was what we call a double bottom. Well, you can see this closing price right here, and then the lower closing price and the higher low here. So it's a really nice divergence right at this point. So we want to be in this. Pushes higher, hits our target, pulls back. It is still a buy, and it's actually on this week's watch list. So you'll see that on the second part of this video. It's actually the first pullback. Even though it's not, it's already hit its target now. The first pullback should be bought on this. It's a small. It's a slower stock. It's not an aggressive high beta stock. High beta means the volatility and the range and the movement and everything that goes along, showing you big moves percentage wise. The higher the beta, the more explosive the move in the stock is. So this would have probably a lower beta assigned to it, and it just kind of grinds around like a sloth. But if you're in the right direction, that's fine. So we're looking at this as a rebuy here, back down here towards that buy trigger area, and continue to move up. And again, we'll focus on that a little bit more in the second part of the video. FSLR. Most of these I get in there. So we bought the FSLR. We bought the August 17th calls. We bought them at $1.77. We sold them at $2.57 plus 80 cents. All right. So there was two calls I bought on that setup. It was a nice trade. You could take calls in it if you don't want to pay up on the price, or you could do options. You could do the regular common shares. Anyway, either way, when you have that setup, this was called a divergence setup with a gap down reversal candle. We look for a 5 to 7 day straight move up, and from that point on, we hit our target perfectly. Profit target was hit. We pulled back off of it. I have no interest in getting back into this. I'm happy it worked out for everyone. We were able to take our profits and move on that one. Aflac. Probably the most textbook divergence over the last couple weeks. It already curled back up on the lower line here with the lower low. Very easy to put our stop in there. Buy triggers all set. Profit. I mean, there it is. That's the type of move you get on an HPS alert. So how do you get it? Well, we know how to identify these, And, you know, when they show up on the HPS watch list, that's when you have to take them. Simple. It's delivered to you. It's delivered right to you. And this video goes out with it. Coop. So Coop was one that we hit our profit today, and we took profits right at the high. Well, check this out. Just check this out. First of all, the buy trigger was below us. There was actually what we call a buy zone. A buy trigger is usually on strength. A buy zone, because this has been holding the 20-period moving average, 20-period moving average, 20-period moving average, we got overbought. And I was looking at a rotation down to the 50-period moving average for the next bounce. This came right down to the 50-period moving average. Even though you don't see that 50-period moving average continued on this chart, it's just the way it's set up. And then we rotated, so we got into it right there. The alert went out. I bought common, I bought options, and we took it off today, and we're all out right at the highs. And look at that, we actually caught the top because I was able to get that email. I said, "Oh my God, we're hitting our target." I just came back from lunch. I actually came back from my daughter's horse thing, and I got the alert right when I sat down. I said, "Oh, let me take this off." We took it off right at the highs and $70 level, and pulled back from there. So, thank you, HPS. Let me know when to take that off. Rubbermaid and Tupperware. These are two I am in. I took an early position, and they are not working out. But they did not trigger our buy trigger. I wanted people to get in only on strength. If you wanted to buy on a pullback, which I did, I waited for a little pullback. I got in, but as you can see, there was some news out on this. Let's let it update here, and there was some news here, and it dropped off. It got crushed. But it has not. Do you notice that the buy trigger has not been violated? So that's why it says watching, because this is an automated. When we have a breakout like that, that's what we want to get. That's where this is where it went out, right where we left off here, right where the chart is empty. That's where we left off. So I said anything above the 2-day consolidation really goes out. That should be a good area, and we never got through there. We just actually sold off the next day, and we sold off and didn't do really much. Now we actually down here. Let me take a look at the candle today on this one. I want to kind of keep my distance unless I see a real good divergence on Rubbermaid. All right, NWL. I looked at it a couple times today. We're oversold, but I'm not going to mess with it. It's a $20 stock. When news comes out, not to defend the HPS setup, because I got in off in this trend line here, and it didn't really play out. And this is actually a good signal, because I teach this signal. It's what we call a price stochastic divergence, and it's probably because I don't have a real big position in here. I wasn't really paying attention to it. But once you start to move up and move up on our stochastics, but the price continues to move sideways, that's a divergence in itself, and we tend to move down. Same thing when we move sideways and the stochastics move down. So this is a great example of two different examples of these things. These are price stochastic divergence. Stochastics move down, usually the price moves down. If it moves sideways, then look for a move up. If the stochastics move up and the price moves sideways, then you look for a move down. This is a fantastic example of this happening right here on this one chart of two of these divergences. Wow, I didn't even realize that. And then the other one was the Tupperware, same thing. It had news here, it gapped down. Our Tupperware never got to our buy trigger. So those are still in a watching state, but I don't think they're worth. By the time you're going to have a better buy signal way before the buy signal here. Again, I was looking, I said, we're going to have to get a breakout of this channel to confirm a buy signal on here. And you can see it never really got up there. It just dropped off on some news, and this is where it is now. There's a very possible double bottom being put in here, a double bottom. A double, just a retest of those lows. But there's no divergence to be seen with that. Lots of times you like to see double bottom divergence or a regular divergence. So I'm cautious on this going forward. If you're in it, well, I think this probably is going to be a buy soon. It's just I haven't gotten a trigger yet for it. these will end up being like everything else. Nice down, a decent enough company makes money. It'll be like anything, like the KHC or the Kellogg that's been grinding down, and then all of a sudden we're able to identify a spot where we pop higher and we start to grind higher. I'm sure Tupperware and New Rubbermaid will be that down the road. All right, so that's that, and then let's go through the other one. I'm going to have to LUV. I'm just going through these because, well, I'll probably end up doing archiving these, and then that way we won't come back to them because we have this LUV. Hit its target early on. I'm just looking back at it, which I like to do on some of the older setups to see where they are in relationship to some of my trend lines. Those are the nice breakout. We hit our target early on that. We did have this trade. I haven't been in it since. It's pulled back and then popped, and then it's way up here now, but I haven't looked back at it, so I just wanted to update it. But it's not on the list. I'm not paying attention. SWK could be on the list. I mentioned it today on the show. It's the last time we got into this SWK. It was a classic divergence. Now, here you have, and again, educational purposes, no longer in this trade. But these trades are worth their weight in gold, I think, because they really outline what we look for and what you should look for. Recognizable pattern, big pivots, big candlesticks, really adjusted line. This is a parallel trend line. This was a nice wedge pattern breakdown, and we wanted to look down here, and we noticed a divergence. So once the divergence is being put in here, we'll put our buy trigger in, meaning that we want to get the momentum break out and the move up, because we know there's going to be a big, strong move after divergence 90% of the time. And then we have our target area up, really up into this retracement trend line. This is a breakdown of this wedge pattern or the sideways pennant, and we broke down from it. So we always look for that retracement back. That corresponds with this downward trend line. Probably an X marks the spot around here. Let's see what happened with this. So it actually blew out here and actually got even higher. All right, that's fine. I mean, you can't deny the aggressive moves, and when we have a divergence and we have a channel, that's also another thing that you have to pay attention to. We have a better chance of breaking out of the downward channel. A divergence is usually a big pivot for a bigger pattern, and if that's a little more complicated than you need to listen to, then just continue to check out the videos, DayTraderRockStar videos on YouTube, and they'll kind of catch you up to date. If you want to learn about the system in a more, go to schoolofstock.com, theschoolofstock.com. I have 2 courses out there. This gets you right into trading. It's really important to understand that this information that I put out 2 courses, high probability methodology course and the ultimate divergence course. Both of them are, there's a lot of information here. You can scroll down, you can see all the chapters and stuff. There's a couple free chapters in here, mostly are videos and stuff. I also have a beginner's course there for free. That's at the schoolofstock.com. And then the HPS trading methodology is really your beginning trade philosophy, everything, developing trading plans, every indicator that we use, what it means, what the examples, the different HPS setups, the different trades that we take. Really a great introduction to the markets, but also advanced stuff when we're talking about all the trade setups that we take at Day Trading Radio. If you're not familiar with the triple stochastic flag setup or the coiled stochastic breakout, trapdoor trend line, the X marks the spot, click on those, and when you'll get a detailed lesson on each of those. So I'm thinking about that right now. All right, at this point, we're going to switch over. I want to, if you're a member, you're going to continue to hear the video. If you're not a member, please go to DayTradingRadio.com, sign up, become a member, get all the research and all the alerts and everything that comes along with being a member. Very affordable and a lot of value to that. So check it out, DayTradingRadio.com. And for those out there, let's continue on right now.